How's it going, guys? Forex Funny here. I want to show you guys an entry that we took on gold and basically the concepts of liquidity and how to start trading SMC, right? So obviously the trend is always going to be your friend. You know, in SMC you could go both ways. You could trade against the trend, with the trend, but I always like to trade with the trend. There's liquidity in both ways. That's basically the easiest thing to kind of track is where's the liquidity and what structure and how can you capitalize on that when liquidity is grabbed following the overall trend, right? So if we look at price action with gold, more than anything, there's always going to have sweeps of liquidity like this, like this, like this, right? These are sweeps of liquidity, but you want to try to capitalize when these sweeps happen. So when these sweeps starts happening, that's when you follow the trend for it to continue being bearish, right? For this trade, it was an M5 all the way down to the M1 trade. And we're going to go through it so you guys can see what I saw here and you guys can start learning these concepts with me all together. So the trade was taken here at around, I would say 9:18 is when we actually struck. And then the trade lasted, I would say, around 30 minutes, right? We have 5, 10, 15, 20, 25, 30 to 35 minutes to trade. We were holding that for. It was a 2 to 2. I always go for 2 to 1s, but when I can take a little bit more, I try to, but I never go past 2.5s. We can explain that in another video. But basically, so you guys can take a look at this trade here. What I was looking for here was structure. If we look at structure on M5, we obviously have very clear and easy to spot. Lower high point, lower low, lower high point, lower low, lower high point, lower low, and here we just have a sweep of liquidity. But that doesn't mean that we broke structure, right? We still have this lower high point to this lower low. So whatever happens here, as long as we're not breaking this, we are still in a bearish trend, right? So what I'm looking for now is what was this sweep of liquidity and what did we grab? So you can see we actually mitigated a level or an FVG right here. And we dropped down to the M1. It's very easy to spot. So you can see how we had our M2, I forgot which was the time frame here. M2, you can see we have a very easy to spot FVG. We just mitigated that. It was obviously a sweep of liquidity that we had and news being struck, but then we're just following through with structure. So if we look at structure here, then we have the sweep of liquidity. This right here on the M1 becomes a breaker. So this right here is a breaker, right? This last bearish candle is what led to this push up that now grabbed the liquidity up here that mitigated from that past level, right? Now, what we saw here is now we're following through a structure to the right. If you look at structure, same thing. So structure goes both ways. It goes in the bigger time frames and also on the smaller time frames. So on structure here, we have a higher low point that led to this higher high. Now we have a lower high point, lower low, lower high point, lower low, lower high point, lower low. This is what I'm looking for. I'm looking for a displacement. A displacement is something that's very easy to spot. You want to try to see a displacement kind of like how ICT explains it, an elephant jumping into a pool. So this is very easy to spot, bearish structure taking control over the bulls. So in this displacement, we have made patterns that as SMC traders we could capitalize from to then go for the shorts and continue with structure. So for this trade, we have this breaker here, which I explained before. We have this lower high point that led to this lower low. And now all that we're looking for is a level or an imbalance that we can capitalize from to then take the shorts. So we're looking for that above the 0.50%. And that is going to be placed right here or right here, whatever you decide. For me, I took it right here because we have the breaker right to my left. And this is why it's important to always have wider stops, because if you have it here and you have your stops right above this level, you could have potentially gotten triggered depending on what broker you use. Anyways, for this trade, all we did was mark it off right here, right below the breaker. Then I have my TP right below the wick, because sometimes again these wicks can lie to you in different brokers. You want to just try to go right below the wicks and just follow with the bodies for take profits. And then we had a 2 to 2. So it was around, sorry, the stop loss was around right here. Just say for measurement, right? I don't have it perfectly, but this is the trade that we took. So we have lower high point, lower low, FVG right here, imbalance, breaker, trigger us in, then price give us a little bit of drawdown, drops down, continues. Again, same thing, following through a structure, right? Lower high point, lower low, sweep of liquidity, but didn't end above, made a lower low. Once we make that lower low here, and we have that new formed FVG, you could already have your stops to break even. And then price steadily but surely drops down to our take profit for a 2 to 2 to 1 on this Friday. So I wanted to show you guys that simple trade that we took on gold, and show you guys how easy it is to trade SMC. Just giving you guys some insight of order flow and kind of how SMC works all around. Of course, I'll be giving you guys more of these videos, but I wanted to give you guys a trade rundown for today. And yeah, that's be it. I will see you guys on the next one. Take it easy, guys.